Good morning, everyone. My name's Mike Danaher. I'm an Assistant Attorney General with the New York State Attorney General's Office. I am out of the Binghamton Regional Office, which covers Tompkins County and Chemung County and Schuyler County and Broome and Shenango and Otsego and Delaware. We have a whole huge physical geography that our office covers. We're out here monthly at Cornell Cooperative Extension and would invite anyone who's watching this on their various devices, televisions, computers, and that sort of thing, to come join us. We're here on the second Thursday of every month talking about various consumer-related topics. We're here at Cornell Cooperative Extension at 16 Willow Avenue at 11 a.m. So we encourage all of you to come join us. The more people we have here, the better event that we actually have. Today's topic that we're going to talk about is the ins and outs of insurance, which before you turn your televisions off and turn your computers to another thing, we want to let you know that insurance is a fact of life for all of us, those of us who drive. We have to have insurance. Health insurance is a big issue. Homeowners need to have homeowners insurance. It's out there, always around us. Life insurance. I always say lots of times that insurance is something that we don't really want until we actually need it. And I need to convince people that it is needed. And in some cases it's mandatory. And it's good for us to be wise consumers when it comes to engaging in purchasing insurance-related products. We have rights as consumers, but we also have responsibilities. And we encourage you to be good consumers, to include in being a good consumer, knowing what your responsibilities are, and that you undertake those as a good consumer and make wise decisions. Most of us are not experts in insurance. However, it's one of those things that we actually do need, usually before we want it. But when we need it, we're really glad we have it. Other consumer products, usually we want before we need it. This is one of those products that we probably need it before we really want it. So there are many things that we have that are associated with insurance. Cars, houses, other expensive personal items. And when we think about it, we go into the store, go into the electronics shop, and we look at that gorgeous televisions up there. And it's like the people are in our own living room. It's so great. Man, I really want that. But do I really need it? I mean, we already have our 65-inch HD television. Oh man, that looks really good. We don't think about that when we think about with our insurance. Insurance is different. None of us wants to spend the money for this thing that we really can't hold, can't see how great it is, can't feel it, can't show our friends it, but it's really something that we need. We can't really say that we have it like that we want it like some other consumer product that we would like, but we're really glad that if it comes to the point in time that we need to make a claim, we're really happy that we have it. So consequently, because of that needs and wants differentiation, we may not spend enough time evaluating what our needs are and determining what is best for us. In other words, we may not take the time to be a good insurance consumer. I can't stress that it is very important to be a good consumer related to insurance. Let's talk about what it is to begin with. It's really a product designed to protect us in the event of a financial loss. It's designed to protect us. The root of insurance is insure, which I took the liberty of the definition, looking up a definition. And it's to make certain, especially by taking necessary measures and precautions. That's what insurance is. Insurance coverage is a contract between the insured, which is us who are going out and getting the insurance, and the insurer, which is the company that's providing us with the insurance. It's a contract whereby one party undertakes to indemnify, guarantee, or protect us financially against a loss by a specified contingency or peril. That's what insurance is. It's protecting us against a financial loss due to a particular contingency. And there's a whole host of those. You have a car and you get into an accident and you hurt somebody. If it's our fault, there's insurance to protect us from the financial peril that we will be financially responsible for injuring someone, or to get our car fixed, or to get somebody else's car fixed that we damaged. It could be in the event of a death. There's life insurance to protect our family and the assets so that our loss of future income and things like that would help to be offset. If our house burns down, there's insurance there to help us rebuild without the horrible financial hit that we would have to take if we had to dip into our own pockets to pay for that item ourselves. So understand that this is the most important thing to understand, is that it is a financial protection to cover a specific loss or peril. It is not an investment. Some might try to influence us to say, oh, invest in this insurance product. Invest in this insurance product because you'll get a payback at some particular point in time. There are adequate investments out there that will help us to increase our net worth, our nest egg that we have. I know as I speak here today, maybe a little bit different, and things will be changed by the time those of you that are out in television land viewing this. Things may be a whole different a month from now. But right now, we're in the throes of the coronavirus, and in particular, the financial hit that the markets are taking as a result of that and other things that are occurring. But from a long-term investment perspective, investing our money now for long-term growth and a reduction of the losses of what the value of our net worth would be if we were just not invested at all, that's what plays out. That's what the investments are for, to help grow what our nest egg is. There may be blips along the line, as there's been throughout my lifetime, of markets dropping and going up and dropping. The all-wise economics professionals would say that the long-term benefit of investment well outweighs those somewhat steep but relatively short-term types of losses. And on the other hand, there's long-term loss, the short-term losses that can be deep, but it can also be short-term profits that spike up. But nothing ever seems to say the same. Insurance is not that. Insurance is out there to protect us for a financial peril. There are many different types of products out there, but understand that insurance is for protection. It is not for investment, And I say that because back, I want to say, this was a long time ago, back in the 80s, or could be mid to late 80s or early 90s, there were certain products that were being sold, insurance products that were being sold. In particular, I use the example of life insurance. There were life insurance products being sold as to consider to be a great investment because they were vanishing premium life insurance policies, which mean if you pay the premium for a period of time, that in essence the premium will vanish over a period of time, and that you don't have to pay it anymore, but the policy will continue to go on. And not only would it go on, it's just going to increase in value. That was a misnomer, I think, because what those were a form of what is referred to as a whole life insurance policy, which we'll get into in a few minutes. But in essence, what happens is that the way that those items were being sold is that they were advanced as having a interest benefit, where people would be paid interest on their policy and on the payments that they made, to the extent that once they made enough payments, the interest that was generated as a result of those payments would be more than enough to offset what the premium was. And that's why the premium. But there were fallacies with that, and people ran into trouble as a result of that. So not an investment, it's protection. Many different types. One that we all seem to think of is auto insurance. In New York, those that own automobiles must have a minimum amount of insurance. There is a component to that minimum amount of insurance that's called no fault, which means it doesn't matter whose fault it was in the accident, but the insurance goes into effect regardless. In case someone is injured by an uninsured driver, there is coverage under your own policy to whatever your limits are. But the minimum coverage, I believe, in New York is they refer to it as $25.50. Maybe it's a little bit more now, but $25.50, which means you have to have coverage up to $25,000 to cover one person who's injured in the accident, and $50,000 for multiple people that may be injured in the accident. So you've got to have this minimum coverage in New York in order to have a vehicle. Those of you that are considering driving around without, or having your license, having your insurance changed, big word of advice. If you want to change your insurance, make sure you get the new insurance before you cancel the old insurance. You can always get if you change insurance companies, you can get a refund from the prior insurance company for up until the time that you'd be covered up until the time that you got the new coverage. Here's the problem. If you let your insurance lapse, or if you cancel your insurance before you get new insurance, you are an uninsured driver. And there are provisions under New York's licensing laws that if you go for any period of time that without coverage, you will lose your license. And then you would be an unlicensed driver in addition to being an uninsured driver. And when you get insurance, your license could be suspended for the period of time within which you didn't have it. So DMV will suspend your license. What you need to do is to make sure that if you cancel your insurance, and there's going to be any gap in time between the time that you end one auto insurance and start another, you have to turn your plates in. Turn your license plates in, or you're going to be suspended. You could say to the DMV, well, it's not a problem. I parked the car out behind the barn. I canceled the insurance. so I never drove it, so don't worry about it. No, 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 no. That doesn't work. You have to take the plates off the car and go in and turn them in. A recent example, personal example that I had is my son moved to another state. And we had a car that my wife and I owned that he was using, and that we insured it under our policy. And I made sure that what we ended up doing is we went to the other state with him, and I transferred the title over to him, and he immediately got it in. We got insurance in the other state, and he went down to the Department of Motor Vehicles in the other state, provided them with the title that I had signed over to him and the registration that in New York that I had transferred over to him, along with his new insurance policy from the state that he moved to, and got DMV to issue him plates for that car. We took the New York plates off, and when I got back to New York, I went directly to DMV and turned the plates in, and then I called my insurance company and made sure the insurance stopped. That was the last thing I did, because I wanted to make sure, even though we really had insurance in the other state and New York for a couple of day period of time, fine with me. I didn't want there to be any indication of a lapse, and that's how we took care of it. So if that's the case, the rules are, and I'm not sure of the specific time period, but up to something like, I think it's like 60 days, if you have a lapse of insurance and haven't turned the plates in, your license would be suspended for that length of time, unless you have to pay a penalty for the length of time based on a penalty per day that you didn't have the insurance there. If you go over that period of time, so if the car's sitting out behind the barn for 6 months and you haven't turned the plates in but you canceled the insurance, you may not be able to buy back in to insurance, and you may have to actually live through the period of a suspension. And the suspension occurs from the time that you go into DMV. So, a word to the wise: if you are going to cancel insurance on any vehicle that you have, turn the plates in first and then cancel the insurance, or there's a big problem. There are serious consequences for not having insurance, including being pulled over and being charged with unlicensed and uninsured operation, potentially. Avoid all of that and make sure you do it. Be a good consumer when going in and getting auto insurance. And we'll talk about that a little bit later when we get through the different other insurance policies. Another thing that we talk about with insurance policies is home insurance. It covers for a loss of property. People typically understand that your house burns down or there's some type of damage to the home, and you have to rebuild or make repairs because of that calamity that happened. You have insurance coverage to help protect against that. But there's also a component of home insurance, homeowners insurance, of liability. If somebody were to be injured on your property, it protects you in case that they would sue you or something because they're alleging that it was your fault. So that is there. And there's different coverages amounts, and we'll talk about that in a few minutes. But there are different coverages amounts for both the loss of property and for liability coverage. Health insurance, that's a big one. Big one. It's been a big one for many years. Health insurance is so expensive. Very expensive for those that have to go out and get it. We're in the middle right now of an election cycle, and one of the possible candidates, one of the candidates, one of the main platforms that they're operating on is that there be health insurance for everybody. and how that would be paid for. And it's not our position, the Attorney General's office, to lean one way or the other. That we leave up to others to decide. But if there is no government-provided insurance, then we have other private types of insurance. Many times employers will offer health insurance as a part of the employment package. I work for the state of New York, and I have the New York State Health Insurance Program insurance coverage. The important thing is that we need to be a good consumer, and depending on the coverage that we need, it will help go toward covering a portion of or all of medical, hospital, prescription drugs, other things that could be covered. The New York has a website that can assist people in helping to make decisions related to the health insurance, which is State of Health. I believe it might be stateofhealth.gov or something, but I would just do a regular search, internet search, and look up New York State health insurance programs or something like that, and you'll be able to find it. For those who are older, there is Medicare. For those that may have disabilities or who are do not have the finances to afford their own insurance, there's Medicaid for low income people. The important thing is to go out and check. I know in the fall of each year, we're into the spring, but in the fall of each year, there's a chance for people to change their health insurance coverage. There are health insurance counselors in each county. I'm not sure who covers Tompkins County, but those who are trying to make a decision on the open enrollment period to change their health coverage, that they locate who it is that provides health insurance counseling and see if you can get an appointment with them to discuss your various options that are available. And that is a very valuable resource, but it is so valuable that I know in Broome County, I'm frequently dealing with the health insurance program counselors in Broome County, and they tell me that when open enrollment period opens up, all of their slots for consultations fill up really quickly. So just a word to the wise, if you're considering that, make sure that you know who it is to contact and find out when it is that they have their open enrollment consulting periods of time, and contact them and schedule your appointment sooner rather than later. Many different health insurance products out there. There's so many things to take into account when deciding on that, and you need to be a good consumer related to that. Disability, there's disability insurance products for that exact purpose in case there's a financial peril due to disability. It's designed to protect income. One thing that I want to point out to people is that frequently when we go out to purchase cars or other big ticket items, it may be also associated with home mortgages, that you may be offered an opportunity to participate in a disability insurance program related to that. Just information to understand is those types of group, I'll call them group credit insurance policies, they only insure you for the protection of that peril. A car loan, a home mortgage, or something like that. So if you were to become disabled, that group disability policy helps to cover that loan. Doesn't help to cover your other expenses. It covers that loan. They're typically a little less expensive because they're only covering that. And it only covers the remaining balance. it only covers usually the payments, the monthly payments on that loan, and it will only cover it up to the remaining balance of that loan. So if you buy a car, you get a loan. Let's say you get a $10,000 loan. And partway through the loan, you become disabled. And you had bought this group policy. And it may be, it could be $1. It's not, but it could be $1. It could be $150. I have no concept of what the amount would be, but let's use a figure. Let's say it's $32 a month to pay for this. So you're going through and you make your loan payment, and on top, added to your loan payment is $32 to pay the premium on this policy. When you become disabled, what happens is the disability kicks in, and the disability policy kicks in. The insurance policy will start making your monthly payment for you for the length of your disability. If you're disabled for 2 months, it'll pay 2 months of your payments. If you're disabled for the remainder of the loan, in some instances it will pay the remainder of the loan, but in other instances it may have a cap on it, to where it may pay a maximum of, and I can't remember the figures, I haven't looked at it in a long time. There was a point in time where the maximum payout was that was allowed in New York was, let's say, I think it was somewhere around $20,000 to $25,000. So at that point, if you had a large enough car loan, and we know how large car loans can be nowadays because cars are so expensive, there could be a portion of time that the insurance company pays the monthly payments and have paid a total of the $25,000 or $20,000, whatever it was. But you still owe money on the loan. There's still 6 months more, and they've already paid out. The policy stops. And all of a sudden, you're disabled, and the policy has paid the max, and you still owe on the car. And the only reason why I say that is if you are investigating this as a possible option on your car loan, make sure you understand all of the terms. And if there is a cap on the amount of payments that the insurance company will make, you need to know that. And if you know that and you make the decision, okay, I'll still take this policy, fine. But if there's a cap, and understand, if you take a $20,000 loan, you think, okay, I'm good. $20,000 loan, the cap's $25,000, I'm in good shape. Understand the policy. Because what could happen is, when you get a car loan, there's interest. You have to pay interest. What the insurance policy do is covering your monthly payment. What does your monthly payment include? It includes interest and principal. Depending on the length of the loan and what your interest rate is, the total payments to pay back $20,000 is going to be more than $25,000. It could be more than the cap on the policy. So you would be getting to a point in time where if you got the car, got the loan, became disabled 1 month in, if that disability policy has a cap on it, your payments under the policy will max out before your car loan's over. If you're concerned about that, you might be better off going out and getting your own disability policy, not attached to the loan, but will pay you for the entire time that you have the policy. In that circumstance, what you'll do is you'll get a monthly check, disability check, that you can then apply to your car loan or whatever other bills that you have. And then if for some reason, if the car loan gets paid off, you'll still get the monthly check. Help cover the other expenses that you might have. It might be more expensive than this group policy, but again, be a good consumer. Decide, how much is this going to cost versus what coverage I'm going to receive, what do I need, and then you can make an adequate, good buying decision that you're comfortable with. It'd be horrible to think going into this transaction that, oh, I got disability coverage on my car loan, no problem, I'm all set. When if you don't understand all the terms, you might not be all set. It doesn't make any difference to me what way you go. The thing that matters to me is that you understand all of the terms and that you then make the best buying decision that you can make. Long-term care insurance. Nursing home care is very expensive. People can buy long-term care insurance policies that will help them pay the cost of nursing home care, should they need it, rather than have to dip into their own assets. If people have to dip into their own assets, they could extinguish, depending on what assets they have. They could dip in, have to go through all of their savings, all of their assets, the investments that they have, in order to pay the nursing home bill, depending on how long they have to stay in a nursing home. So there's insurance products available to help protect that. And understand that if someone doesn't have long-term care insurance to help to pay the cost of a nursing home care, and they have assets, they have to use their own assets first before they would qualify for Medicaid to cover the expense of nursing home care. And so that policy is out there. Life insurance. Life insurance, again, is not an investment. It protects us in the case of loss of life. There's two main types of life insurance policies. There's some hybrids and that sort of thing. But there are two. One is term, and that's exactly what it means. It covers you for a specific term. So if you're 25 years old and you get a life insurance policy, they're usually, they're a year. It'll cover you for that 1 year. It's relatively inexpensive because the chances of you, it can happen, there's no question it can happen, but the chances of making a claim against a life insurance policy of a 25-year-old is a lot lower than an 85-year-old. So the cost for that term is relatively small. If, with most of these term policies, they continue year to year, and as you get older, the premium increases. As you get older, the premium increases until where there is a term, I'm not sure what age that cutoff is, but I'm sure I'm past it, where there's a lot greater likelihood that there'll be a claim made as we get older, and the policy premiums jump really high. So you have to decide, under your particular circumstances, what works best for me now? A term insurance policy for a length of time? And again, it's not an investment. It's just to protect your assets. Somebody would say, well, I'm 25 years old. I owe nothing. I own nothing. And I owe $75,000 in student loan debt. Do you really need a life insurance policy? If you don't have anything, what are you protecting? And you have to make the decision. What do I need it for? Then you're young, let's say you're a little bit older and you're a young married couple that has young children. Well, how are you going to provide for those children if something should happen? So maybe the need for a life insurance policy increases. And then you get to a well-lived life at 85. Whatever you've acquired enough of a nest egg. You put money aside for a funeral and a burial, and do you really need life insurance anymore? Who is it protecting? Maybe you do. Maybe you have a spouse that you still want to protect in the case of a death. The important point is all circumstances are different, and we have to make the proper choices. How much coverage do you need? Well, how much do you have in assets? There's another type of policy besides term is a thing called whole life, which is exactly how it says. It's to cover you for your whole life. It's not the term of a year that there's a new year every year. It's a whole life policy, which is a policy that will cover you for your entire life. They used to refer to those as level premium life insurance policies, because if you get it as you're younger, you may have to pay more than you would if you bought a term policy, but you can get a policy that stays the same or relatively the same throughout your life, and you still have coverage. And the earlier that you get the policy, the longer you can spread out the whole life premiums that are paid. And as a consequence, your premium won't change, but you can still have the coverage. There is that whole life policy was the one that was sold back in the 80s, 90s as vanishing premium life insurance policies, which what was happening was that the insurance agents were sitting people down. And I will tell you, I know that this was going on because it happened to me. I understood finance and know finance so that that part of it didn't really sell me. But what they did was they presented to me a scenario that says, look if you get this whole life policy, you'll be paying X number of dollars a year for the policy. And what happens is the money you pay in gets invested by the insurance company. And it grows. Interest makes it grow. And there'll be a point in time where the pool that you've accumulated is large enough that the interest that generates from that pool of money is more than what your level premium is. So you'll still have a $50,000 policy, but you won't have to pay the premium anymore. Well, what happened was, in the 80s and 90s, when they were saying, hey, the premium vanishes after 10 years. You still have $50,000 in coverage, but you don't have to pay anything anymore. What happened was when they were making the pitch to the consumer, they made assumptions that said, well, look this money that you deposit, it will generate 8%. And 8% a year plus your added premiums, and then 8% on those added premiums, that builds this whole kitty. Well, what happened was, at the end of 10 years, their projections for investments were not met. And people were saying, well, it's 10 years up, okay, I don't have to pay this anymore, right? And they go, no, sorry about that. No, you got to continue paying it. Why? You told me it vanished after 10 years. Well, that was under the assumption that the 8% or whatever investment figure they were using was a reality, and it turned out that it wasn't a reality. And so there was actually litigation back at that time of people suing, a lot of class action lawsuits saying, you sold this thing as a vanishing premium life insurance policy, and all these consumers got ripped off because it did not vanish. That gets to what I talked about earlier. Insurance is not an investment. Don't look at it as an investment. These projections didn't live up to what they were. If you wanted to invest in something that was going to generate 8% or whatever, your focus should be on an investment product, not an insurance product. And so the whole life policies do serve a valuable purpose. They could make the premium level. You don't get to the situation where you want to still have $50,000 insurance on a term policy when you're 85. And I'll use an example. We had a relative that for various reasons had to have an insurance policy to protect his family. And he was getting older, and he had this product. And it was a similar thing, that he had it, let's say in his 50s, and he was paying a certain amount of money a month, that even as a 50-year-old, he was still paying more than what the cost of the insurance was. So he was building up a cash value. Build up a cash value. He still had this obligation to pay out a certain amount of money to protect his family at the, whenever, if he should pass away at any point in time. So it got to be where he was in his 80s. And he was still paying, I'll just grab a number. Let's say it's $200 a month. Paid $200 a month in his 50s, in his 60s, in his 70s, in his 80s, which is fine. Out of sight, out of mind, never really worried about it. But what happened is when he got to a certain age, and I don't know what that was, let's say 70, 75. That reserve we were talking about started going down. Why? Because the $200 a month wasn't covering the full policy. And as he got older, the cost of the policy was getting much higher because obviously he was getting much older. And the contingency of his death was the possibility. Here's what happened. He did pass away, and he passed away, let's say time frame. Let's say we're in March of this year. Let's assume for the moment that he passed away in March of this year. What happened was that starting in whatever year it was, and that cash balance kept going down and down, down, and down. He received notices from the insurance company that said, hey, cash balance is going down. You need to increase your payment of $200 a month. Or, as of March of this year, November of last year, the policy will run out of money. And therefore, you're not paying the premium, and therefore, the policy will expire. And that our policy amount won't be able to be paid out because you're not covered anymore. He passed away in November, or he passed away in March, but the policy did expire and he never increased his payments in November. Therefore, and it was a $100,000 policy. That $100,000 disappeared. And when he passed away in March, it wasn't available. So, the important thing again, understand what you need, understand what the coverage does. Don't just look at the amount you have to pay. That's only one of the factors, the amount you have to pay. See what coverage you're going to get, see what effect that has, and if you're going to run into a contingency of building up a cash balance that ends up eating away over a period of time, it doesn't matter. I mean, it may be that this gentleman said, you know what? If I make it to 85 years old, I'm not that concerned about what's going to happen after. Fine. The problem is if you understood it to be one way, and it turns out that it's not. And with insurance products, you need to periodically check to see where you are. Don't just, okay, I got it, and go to sleep and move on. You got to check it over a period of time. Because there could have been a point in time where this gentleman looked at it at 75 and said, there's a chance I could live to 90. And I really want to make sure that I get to 90. And if that's the case, rather than $200 a month, I'm going to pay $250 a month. Or I'm going to pay $280 a month. I know in this scenario what happened was when the big bang hit, when the policy was going to be shut off completely, if things weren't made, instead of making a larger contribution, his payment would have been something like $850 a month after that. And it just was not financially able to cover that. If, however, he took into account early on and said, I got to stretch this thing out to 90 or 95, maybe he could have adjusted the payments to do that. Again, the only way you're going to know that is be a good consumer and look it over. Figure out what the right weighting is and be the good consumer. Whole life policies is kind of a flat premium. It pays interest. You just have to understand how it's going to work. I knew, just for an example, I have some whole life, I have some term, a little bit of everything. But when I looked at it, I didn't bite into the fact that this premium is going to disappear. I didn't really care. So what I did is I've continued to pay it. Many, 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 many years afterwards. And what ends up happening is the amount of insurance that you actually have increases. The more that, I just continued paying, I just consider paying it. So I have just for my own personal example, I had one that I bought when I was much younger, much, much, much younger. That, again, I have a bunch of them. I think there was one that I had that was a whole life policy, more expensive than a term, but I decided I'd get it, that was like $35,000. If I passed away, my family would get like $75,000 now because I've just continued to pay it along. There's probably a point in time where I could have just stopped and it would have just stayed at 35, and that was fine. It would have been fine. So you make the choice, make the decision, and then you can move on.
Are we talking about insurance, by the way?
We're taping right now. As you can see, there are many different products that cover different risks. This is where being a good consumer comes into play. So the first, determine what your needs are and what coverage you need. Decide what products will meet those needs. Then shop around for companies. And again, don't just focus on the dollar amount. You want to look at and deal with reputable companies. Know who you're dealing with. And then the decision is unique to each of us. It's, how much automobile insurance do you need? Do you need collision on your vehicle? Meaning, if you get your car damaged, does your insurance policy cover for the damage? If the car's too old, maybe you don't need to have that type of coverage anymore. Maybe you do. How much are you going to protect financially if you injure someone? What assets are you protecting? All of those things go into the mix. And then you make the decision on what is best. Make sure you chose your insurance based on what is right for you. Investigate your options. Again, it's something you investigate before you actually need to use it, and cover that. Don't be rushed into purchasing something. Do not feel pressure from someone putting pressure on you. Oh, you got to get this policy right here. Give yourself time to think about it. If you have any problems, insurance companies selling policies in the state of New York are required to be licensed in the state of New York. The licensing entity is the New York State Department of Financial Services. It's made up of generally two divisions, the Division of Banking, or the Banking Department, and the Insurance Department. You can file a complaint with them because they license insurance companies and oversee them. You can file a complaint with my office, which is the New York State Attorney General's office. We protect consumers related to different consumer-related issues. One could be insurance. We talked about it before about for health insurance, that there are health insurance counselors in each county. You can investigate that option if you're considering, what New York State health plan you're going to go on, and you can consult because everyone is different. You should really take into different types of consideration, like what drugs are you on? Does the insurance policy that you're looking to get cover those particular drugs? Is your doctor a participating provider in that insurance program? Does it provide mental health, behavioral health services, maternity care, childbirth, inpatient, outpatient surgeries? As far as participating providers, make sure you understand what it is. Is your provider willing to accept just the copay that you have? If they're an out-of-network provider, what may happen is that you may have to pay more to see that person, even though you have some insurance coverages. Does it cover hospitalizations? Does it cover routine doctor's appointments? See what you cover. Even if the insurance company confirms that your provider is a participating provider, call the provider too. Call both the insurance company and the provider. Make sure that you're all on board with that. I know that as part of the state health program, I have dental coverage, which covers regular dental visits. Like if I had a catastrophic injury or something, it might be my health policy that covers it. But for dental, it's routine visits, some fillings, that kind of stuff. Most providers are not, at least in my area, but my particular provider is not a participating provider. What they will do is they will submit the claim to my dental coverage plan, but they expect me to pay the bill when it comes. So if I go to go have a checkup and it's $100, I have to write them a check for $100. They will submit it to my insurance company, and then I'll get a check from my insurance company. But I can assure you my check is not $100 that I receive from my insurance company. It's only a portion of it, because the arrangement is that they're not a participating provider. They won't accept just the amount that my insurance company will cover. I understand that. I still go to this provider. I like this provider. My family goes to this provider, and we're comfortable. But again, I investigated it. I knew that was going to happen, and I'm willing to live with that. So again, consumers should do the same. If there, one kind of proviso that I'd like to talk about is on the health insurance and government programs. There's Medicare and Medicaid. We talked about that. Medicare is for seniors. Medicaid is for disability and for those low-income earners. Those that go on Medicare, there are other programs available, such as, it's kind of a misnomer, but I just want you to know that it's out there, and that's Medicare Advantage plans. Medicare Advantage plans are not Medicare. They are separate from Medicare. It kind of pulls you out of Medicare and you get coverage under that. There's supplemental policies that will supplement your Medicare, so you're staying in Medicare, but you might have supplemental, which gives you additional coverages that you would pay for. I only say that to let you know that those are out there. Be a good consumer, investigate it. We've had people who have been had their door knocked on. Open the door. Hey, I'm so-and-so. And they may have said something completely fraudulent, misrepresented, or they could have said something like a Medicare Advantage plan, and the consumer didn't know what that meant. And they say, oh, they must be with Medicare, when in fact they are not. They're a separate salesperson. And they get convinced to say, oh yeah, I'll get this policy from you. And it turns out it's not what they need. It's separate from Medicare. They thought they were still in the Medicare program, and they were not. So understand exactly what it is. The time to investigate is before you sign up. Once you've signed up, it's much more problematic after that. So be a good consumer, investigate all your options, and then you can make a sound decision related to insurance. If anybody has any particular questions related to insurance products and things like that they want to ask, generally while we're taping, I'm glad to try to touch on them. If not, thank you very much for attending. Those of you out in TV land, please come join us the second Thursday of the month at 11 a.m. at Cornell Cooperative Extension, 615 Willow Avenue. It's always great to have people join us. And if you have any other particular questions, consumer-related questions, you can contact our office. Just look us up rather than me throwing a number out at you. Just look us up, New York State Attorney General's office in Binghamton. And for those of you that just want to quickly jot down a number, if you're in the Ithaca area, if you call 1-800-771-7755, that will actually ring in my office, the Binghamton Regional Office. If you call that number in Rochester, it will ring in the Rochester Regional Office. If you call that number in Buffalo, and so on, you get the story. It's a statewide number. It's the same number, but it rings in the particular office of where your area code is. So we will end up getting that call. And we can try to answer your question, or if you have a particular complaint about a business that you would like to file with our office, we can direct you to how to file a complaint. Complaint forms are available online. If you just want to look it up and fill it out, you can fill it out, and we can attempt to try to resolve that complaint that you have. Other than that, thank you for joining us. Hopefully we will see you later, and we hope that you have a good day.